A Brexit-a-Biscuit. The market just can't grasp it. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of June 12th, 2016. And I title my newsletter Beyond the Noise for a reason. So if you go read a market commentary, if you've read one in the last week or two, if you go read one now and probably over the next week, the Brexit, or Britain's vote to exit the European Union, which is taking place really soon on June 23rd, it's in every commentary. It's a big deal. People are paying attention to it, and it is important. I call my newsletter Beyond the Noise because there's always something. There's always something out there. There's always some big news that's either happening or is planned to happen that has the market a little bit on edge and creating some uncertainty. If we just look back in time, just last year it was Greece, and then it was China, and this ongoing thing. It's been Fed interest rates. When are they going to cut rates? Are they going to cut rates? By how much? And energy prices have been a big deal lately. And before that, quantitative easing, the fiscal cliff, if you remember that term from some of the political debates. And there was a U.S. government shutdown, arguments over the budget, and coming up we've got the U.S. presidential race. That's going to already causing some uncertainty, and it's going to increase as the election gets closer and closer. And then what's the next thing? There's going to be another story, always something in the market that's creating a little bit of angst or uncertainty. And speaking of angst or uncertainty, here's an article I came across that I thought was interesting. This is from thestreet.com, real money, and the headline here is Why Market Angst is a Waste of Time. The author is Jay Somani. And there's a quote in this article that I thought was super interesting, and I pulled it out. I'm going to make it really big here so you can see it. And here's the quote from Jay's article. He says, Mr. Market chases more and more people away as they realize how impossible the odds are against the average person on the street. Sad but true. Well, I may have to respectfully disagree with Mr. Samani. Mr. Market may chase more and more people away if they believe that, but I don't buy into the fact that the odds are impossible for the average person on the street. Don't buy it, and I've proven it to not be true. And I'm going to show why I believe that in just a minute. So I think if you're trying to follow the crowd and invest based on emotion, that's probably absolutely a true statement, but it doesn't have to be that way. So I don't think I'm an exceptional person, but I have been able to find out how to read what the market's doing. Pretty simple, repeatable methods to get beyond the noise, the news, the headlines, because they're always there, and there's always going to be more. And to really read the reality of the market, to find out what's really going on, and then to go with it, to go with, the market tells a story. It moves in waves of optimism and pessimism, and it seems like the news feeds those more than it creates those. Okay, those waves of optimism and pessimism exist, and the news kind of validates people's pre-existing notions, and for the most part, I think, again, the news feeds the waves that already exist rather than creating them. Now, here's my returns over the last several years. That statement that it's impossible to beat the odds for the average person on the street. I think if you're able to see beyond the noise and to invest and trade based on reality with a rational, disciplined, repeatable system, you get results like I'm getting here. 2013 over 50%, 2014 over 30%, last year nearly 30%, and this year we're on track to have a very similar year. And I'm not showing this to boast. It's that I believe it's true. There's that perception, like the author said, that it's impossible to beat the odds, it's a rigged system, all that kind of stuff. I don't agree with that at all. I think you can do it. I can do it, and I think you can do it by trading based on the realities of the market and keeping it very, very simple, and only trading based on verifiable, observable facts. As I talk to so many people, I hear so many what are ungrounded opinions about, presidential cycles and the Santa Claus rally and all this kind of stuff. Those are all interesting notions, and they may draw your attention to look for things to happen in the market, but the reality of what's actually happening in the market is indisputable, and it's very tradable, very actionable. So let's take a look at the charts. Let's retreat to reality from speculation and get beyond the noise into what's really going on in the market. Let's do that now. So here's a daily chart of the S&P 500, and here's what's really going on. we got a choppy market. We have had it for some time. Last summer we had a big dramatic decline. Market recovered from that. It went on to a new decline at the beginning of the year, and it's recovered from that. And if you've been following my updates, let's zoom in here. I was watching some key levels. And I believe in Dow theory that says a market trend is defined by lower lows, lower highs, lower lows in a down market, and in an up market it's higher highs, higher lows. So right now we're in a bit of an up market, which is surprising. I had really thought that this down market, which we had, this was lower low, lower high, lower low, and up until late April, it had not taken out the previous highs. Pulled back a little bit, then it went and took them out. And I had to find three different levels here. We're kind of in stages. Like if it went through this first level, it was a warning. This next one, kind of a next level warning, and it took out this one from last fall. That tells us that there is now a probability we're going to go take out the high from last May and put in an all-time high on the S&P 500. And this is almost hard to believe. I'm really looking for a bear market. I think it's coming at some point, but it may be delayed. And so what the reality of price action is telling us, again, things move in waves of optimism and pessimism. And we've had some fairly optimistic, mildly pessimistic, then more optimistic wave. And we may pull back here, but the odds are, the probability is we'll go on to make a new high. Again, sometimes it's hard to believe what your lion eyes are telling you, right? But that's what the reality is. Is it certain? Absolutely not. Is it probable? Yeah, it's probable that we're going to go make some new highs before we head down into a major correction. And that's okay. We're going to trade according to those realities. Now, next week is going to be a volatile week. Wednesday, the Fed comes out with their latest minutes, and it doesn't matter what they say. Just the fact that they're saying anything, because there's so much uncertainty in the market right now, like always, right? It's going to cause volatility. We're going to have a special free live trading room, so as the minutes come out, we will watch what happens. We'll look for some setups and maybe take some trades as that happens. And there's a link for a free guest pass. So if you'd like to come sit in and watch that as the drama plays out, as the Fed releases the minutes from their meeting, it'll be this coming Wednesday. So you're welcome to join us. It'll be really interesting and fun. But regardless of that, again, the probability is that the market's going to go make some new highs before it heads down. I don't think they're going to be significant. I don't think we're going to put on a couple thousand points, but it may make a new high before it finally turns down. Of course, there's a probability that news could come out, news from the Fed, the Brexit, all that kind of stuff, and it could turn down from here. And we'll know if it goes and takes out this low right here, below this where it says 1B. If it goes lower than that, then we may not put in a new high. So we'll watch and see, and it'll be super interesting. And we will trade according to what's going on here. And even though we had a bearish scenario and it's taken longer, we may go put in new highs, we're still making profits on the trades we're in because we're following a very disciplined system on each individual trade. It's interesting to know what the broad market's doing, but we're trading, for individual stocks and ETFs and stuff like that. We're trading the realities of those instruments, and we're doing pretty well on them. Let's take a look at gold and oil as we always do. So here is gold, and now gold is in a bullish sequence. It started back here at the beginning of the year, and we've been talking about this for a long time, that we had an impulsive wave 3 up. It stalled a little bit, but it went in and put in this high and then pulled back and fully met the rules for what's called an Elliott wave 4. So it retraced into a Fibonacci zone of 38.2 to 61.8%. Again, this is reality. This is the moves from optimism to pessimism, and now we've got a new wave 5 starting. Pretty clear evidence that that's starting right now. We got this initial move. It'll pull back at some point, and if it makes a new high, then there's a really high probability it's going up into this target zone of 1350 up to 1441. So let's watch that. The final thing will, if it breaks through the high of this wave 3, which is at 1304.95, if it breaks through that high, the probabilities just increase. So there's actually a really good case for going long on gold, whether it's the futures or an ETF, GLD, GDX, one of those, or gold mining related stocks. There's a pretty good case for going long. And it won't go straight up. It never does. It goes higher highs, higher lows, higher highs. So don't be faked out and worried. But this really looks like it's heading up, and it's good news. So let's look at oil. So oil's had this pretty amazing recovery. We've been talking about it every week. Pretty much an unbroken move up of higher highs, higher lows. Now, it does not go things don't go straight to the sky, and we could and probably will get a pullback just like gold did. This is all a wave 3. We'll probably get a 4 pullback before we move on up into the final target zones later this year into next year, which are $61 to $82 per barrel. So it won't be surprising after this long extended run again to get a pullback, maybe significant, probably again down to Fibonacci levels from this move down into here somewhere, and then head up again. So we'll be watching for that. So that's the update. Beyond the noise, a look beyond the noise. Hope you find it helpful and interesting. Please send me your questions, dean@followmetrades.com. Love to hear from you or your comments. And stay tuned. Again, we invite you to that live trading room this coming Wednesday as the Fed minutes come out. That'll be really interesting. And if you can't make it, it'll be recorded. So go ahead and register on the link, and then we'll send out a recording as well. Well, that's it. Have a great week. Trade safe. Follow the reality. The news is interesting. It's fun. It brings our attention. It lets us know when volatility is coming. But let's trade and put our money in the market according to what's really happening and continue to get good results. Thanks. We'll catch you next week.